Hey, it's Rob. Welcome to Everyday Investor TV show, the hottest investment show in the world. That's right, I said it. I don't care who knows it. Remember, when anyone offers you any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what's the return on investment? Number 2, when do I get that return along with the money that I put in? 3, what is minimum investment amount needed? And 4, what is the risk, the worst case scenario? Super excited about today's episode. I'm talking to my good friend Costas. He is going to teach us how we can make money investing in pre-construction condos. Specifically, we're going to talk about the city of Hamilton. You don't want to miss this show. We'll be right back.
Well, when it comes to investing in pre-construction, it's very different than buying a resale property. Any realtor can get you access to a resale property. It's pretty straightforward. But when it comes to pre-construction, there is only a very, very small number of agents like myself, known as platinum agents, that have first access to these projects. And that's why I created the company with the name First Access Condos.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rob. Welcome back to Everyday Investor. Before we talk to Costas and he teaches us how we can make money investing in condos, let's find out what's happening in the world of stocks with stock expert Omar Khan.
Thanks, Rob. Omar Khan here, guys, with Data Trading. Now, let's look at the year in review. 2021 was a good year for the markets, but what propelled the markets were largely, not largely, but to a good extent, energy, oil and gas companies, banks, and some of your larger cap technology companies. Now, will this continue into 2022? Let's see. Oil and gas looks like it's something that's not going to be used as much going forward. Obviously, we can see it clearly that the world is moving to electric vehicles. So that's something we're going to keep note of. Also, on the technology side, will we continue to advance technology-wise? I think that's going to be clearly evident coming up soon. Now, there's something called the January effect. The January effect is how the markets do in January typically indicate how they do for 2022. So 2021 was a good year. Typically, the year after the first presidential year in the US, that's this year, 2022, the second year, markets don't do as well as they do in the first year. Let's see if that holds true. But we're going to look at the January effect to see what the markets hold for 2022. Again, it's not 100%, but our job is to tilt odds and probabilities in our favor. Back over to you, Rob. We'll see you guys next week. Take care.
Thanks, Omar. Costas, my friend, great to have you on the show with me again.
It is always a pleasure to see you and to talk to you, Rob.
Yes, I mean, here we are in 2022, and we're doing our thing. We're still doing this thing virtually, but hey, I like it. I like the CNN style, and you're, instead of a profile shot talking to me, the viewers at home get to see your handsome face. So it's a good gig. Makes the show a lot more pleasant to watch.
It is. I guess it all depends on who you're asking, but it's definitely a great chance to see you. And any chance I get to talk to your viewers, it's always a pleasure.
So listen, you're not big on upping yourself, but I want to for a second. I'm going to throw a couple things at you, and then you tell me what it means. So you're in Toronto. You work in the peripheral, the GTA, Hamilton, little bit east, a little bit north. You work with the big developers, but you're what's known as a platinum. You provide a platinum service. They recognize you as a platinum agent, and there's only a few in the city. And what does that mean? I mean, your whole marketing strategy where you help so many people is First Access Condos. What does all that mean in terms of someone like Rav being able to invest in the condo world?
Well, when it comes to investing in pre-construction, it's very different than buying a resale property. Any realtor can get you access to a resale property. It's pretty straightforward. But when it comes to pre-construction, there is only a very, very small number of agents like myself, known as platinum agents, that have first access to these projects. And that's why I created the company with the name First Access Condos. To put into perspective, there's 53,000 realtors across the GTA. Only 80 to 100 are platinum realtors. So think about it. That's 0.02% of all realtors have true platinum access. And the reason it's essential to work with someone like myself is that we have first access. And why you need to buy first is when you have the greatest selection of inventory, the best real incentives, and the lowest price point. And when it comes to investing your money, you want to maximize return. So you got to buy when it's the cheapest.
And what are your thoughts? What's your outlay? You don't have a crystal ball, but what are your thoughts in and around the condo market in Toronto, in Hamilton, just, for 2022?
Well, I'm extremely bullish when it comes to condos in the GTA and much of the southern Golden Horseshoe. And that's because it's simple macroeconomics, supply, demand. And we have a scarcity of supply and ever-growing demand, which is fueled by immigration. This part of Canada and of the world is the number one destination point for immigration in North America. And that's because we have ever-growing job market, industry flourishes here. We've become the new tech capital of North America in the last few years. And while the rest of North America and the world suffered really tough times during the pandemic that we're just hopefully ending shortly, our part of the world did fundamentally well. And on average, households in the GTA and around the GTA saved more than $70,000 more savings than they did the year pre-pandemic. So there's a lot of capital here. People are still working. Only about 8% of the population really saw tough times when it came to employment. The rest of the workforce was either working remotely or could still be at work. And because of this and continued immigration, we're seeing our market very strong. There's been record increases over the course of the pandemic, and we predict record increases to follow, and not just for Toronto, but for Hamilton especially.
And Costas, why do you because I know you're also an investor, you help people, but you're an investor yourself. Why are you bullish on pre-construction condos as opposed to buying a duplex, a triplex, a resale condo? Why is this specific category your niche, and why you love it so much in terms of an investor?
Well, I grew up in a family that owned a few properties, so I saw what it was like being a landlord. And being a landlord is not a glamorous job. It's made out to be in theory, but in practice, it's quite the opposite. Now, the reason I like pre-construction is you're buying based on location and what's happening to an area in the near future. We can predict these things by knowing what is happening in the area through the city building departments and from industry and what's improving and what's not improving. And we want to invest in areas that are up and coming or areas that are already at their peak, okay? Now, why I like pre-construction is that you write a series of checks after purchasing a unit through someone like me in the first round, and you watch your money appreciate substantially during the construction process. So the bulk of your appreciation and gain is made before you have to be a landlord, before you have to service a mortgage, before you have to pay property taxes, insurance, and carrying costs. And that's why I like it. It is basically the greatest return with the least amount of effort.
And you mentioned checks, writing checks. What percentage, just to throw numbers out, let's say we have a $500,000 condo pre-construction. What's the percent that someone like Rav has to put down of that $500,000 in order to buy that condo?
Well, the rule of thumb when it comes to pre-construction is that you have to put deposits totaling 20% prior to the project being completed. Now, usually we would put 20% in a series of 5% installments over the course of around 2 years, okay? But what we're seeing is extended deposit structures up to 720 days and beyond because of COVID. It was actually the silver lining to the COVID storm cloud when it came to pre-construction. Developers approached their financiers and created even further deposit structures. So it's not uncommon now that we might see 5% a year, or instead of 5%, spread out in 2.5% installments. And sometimes we even see 5% being withheld until occupancy. And that allows our investors to keep their money in their own hands longer, where they can have them in other revenue streams, building revenue before they put it towards the condo.
So it's a $500,000 condo. By the end of it, generally speaking, 20%. So that's $100,000 that Rav needs to put out. But you're saying it might be $25,000 a year over 4 years. It might be, $30,000, $33,000, over a year and a half, or whatever the case is. Is that what you're saying? It's spread out.
Yes, there's definitely a deferred deposit structure no matter where you buy pre-construction or with who you buy pre-construction. Okay? But be wary. First round is always 20%. Sometimes you're going to hear decreased deposits of 5, 10%. That means there's been price increases and limited inventory remaining. And you always want to buy at the lowest price point to maximize your returns. So it's essential that you buy with someone like myself who's a platinum agent and has that first round access for you.
So what you're saying is if you hear that, hey, I only need 10% down, that's probably at the latter end where there's only a few units left. It's already made a lot of money and the developer wants to get out.
Exactly. And then you'll be making less of a return. And the key to investing is to make the most possible.
So basically, if it's a $500,000 condo, let's say in the first year it goes up, I just throw out 5%. So now in the first year, that condo is worth $525,000. And in that first year, I really only put down, let's call it maybe 10%, because the next year I'll put down another 10%. So I put down $50,000. In that first year, I made, hypothetically, $25,000, which is a 50% return on my investment.
That's a 50% annualized return, and that sounds fantastic. But I'm going to tell you something that you already know, but it'll blow the mind of many of your viewers that aren't familiar with this. We are seeing increases year over year of close to 10% on average over the past 7, 8 years up until today. And if you've only put down 5%, but your unit's gone up 10% with $500,000 as the purchase price, you've made a 200% return in that initial year.
No. I get it. I like to, and you do too, when we explain the numbers, we like to use conservative, And so now, what's happening in Hamilton? I mean, we're going to take a break soon, and there's a deal that's coming out there, and we'll look at that. But what's the big deal about Hamilton? I mean, I know people have been talking about it for the last several years. Why does Costas like Hamilton?
A multitude of reasons, but the main one is we are seeing a huge influx of cash being put into Hamilton from all major levels of government. We're going to see billions of dollars invested to improve transit, improve infrastructure. We're seeing close to $160 million invested to refurbish the waterfront, okay? And we are going to see Hamilton not only get a facelift, but get catapulted to a different level of city and quality of life in the next decade. And we should capitalize that as investors. And that's why people know this, and people are flocking to Hamilton. During the first year of the pandemic, where the Greater Toronto Area and Toronto proper saw a decrease in rent values, Hamilton was the only region to see an increase in rent of 10% on average.
Wow, in the year 2021.
In the year 2020, okay, and into 2021, Hamilton's rents increased while the rest of the GTA's decreased.
Interesting. Okay, listen, let's take there's a product that's coming out here that you wanted to talk about. We'll look at the numbers, and we'll do that when we come back from the break. Costas, thank you so much for being on the show with me. Appreciate it.
Thank you.
Don't go anywhere. We're going to continue to learn about investing in pre-construction condos, and specifically in the city of Hamilton. We'll be right back.
Hi, it's David from the Q Theta Fund. Do you know that you can invest in great businesses like Apple and Microsoft and earn 2 to 4% a month just by agreeing to buy those same stocks at lower prices than they're currently trading at? Owning high quality businesses over time is a proven way to grow your savings. Adding an additional 2 to 4% on top of that can allow your savings to grow that much more. At the Q Theta Fund, we use the same proven strategy. We invest in strong, identifiable businesses that continue to grow their revenues and profits. We add to this our Q Theta strategy by selling options on these same companies that allow us to manage our risk, and enhance our returns by earning that additional 2 to 4% a month. Now, if you would like to invest with other investors who you watch on this show, then please contact me and my email address right here.
Hey, it's Rav. Welcome back to Everyday Investor. I'm talking to my good friend Costas, teaching us as always how to make money in the condo market. Pre-construction, by the way, and we're going to take a look at Hamilton. Before we do that, let's find out what's happening in the world of mortgages with Kyle Ford.
Thanks, Rav. I'm Kyle Ford from the Kyle Ford Mortgage Team. I often have many people reaching out saying, how do I get involved in a private mortgage? This week, I'm excited to announce an opportunity we have available in St. Catharines, Ontario. Our well-qualified borrowers have purchased a large multifamily building that they're going to be doing value-add renovations, adding additional units, and bringing the building up to today's modern standards. As a lender, you have the ability to participate in this mortgage at a 10% interest rate with a 1% lending bonus. Our minimum lend requirement for this deal is $100,000. If you're interested in participating in this or any other private lending opportunities, don't hesitate to reach out to myself and the Kyle Ford Mortgage Team. Thanks, and back to you, Rav.
Thanks, Kyle. Costas, talk to us about this project here in Hamilton.
Well, we got a great project coming up located at 206 King Street West in Hamilton. Okay, it's a short drive to McMaster, walking distance to everything. If you think about it, it's got a 98 walk score. That's near perfect, a 96 bike score. So whether you're walking, cycling, you can get to almost everything you need within minutes. And being a short 5 to 7 minute drive to McMaster, there's great opportunity as student rentals. And those international students come with a lot of money. They pay a lot of money to come to school, okay? There's a lot of international students in Hamilton, and it'd be great to capitalize on that. The project is called Radio City. Boutique building, only 14 stories, only 122 units. That's fantastic and ripe for investment because boutique buildings tend to appreciate slightly more than tall towers.
And what's the kind of the average price in this building, and what do I get for it?
Well, we're estimating to have a price point of around $900 a square foot. Okay, so condos are slightly bigger outside the GTA than in the GTA. So we're going to see one bedrooms around 500 square feet. So at $900 a square foot, we're looking at around $450K for a one bedroom. And in comparison to the GTA, which one bedrooms are now $700,000, $800,000. Okay, this is a fantastic opportunity because rents in Hamilton are very close to rents in the GTA, not as far off as people would imagine. If you're buying in Hamilton, you're going to be very cash flow positive.
So you're saying for the same product in Toronto, it's almost double, but we're getting close to the same rent.
Yeah, you'll be close to 80% of the rent in Toronto, where the price point is almost half.
Okay, so here we are, King Street West, Hamilton, close to McMaster. The project's called Radio City. One bedroom goes for $450,000. So here we are, $450K. This launches when?
This will be launching end of January.
End of January. Okay, so for this
very
month
soon.
Here. And we need to put down, I'm assuming, 20%,
which is $90K.
$90K. But this is broken up over the period of 2 years or 1 year, 3 years. Well, how?
This will be broken up at least over the period of 2 years, if not more. 2
years. Okay, so we're
looking at about 4 payments. If we're going at 5%, okay, yeah. We're looking at 4 payments of about $22,500 per payment.
So $22,500 times 4. Is that right?
Yes, sir.
Over the 2 years plus.
Yes.
Okay. So, and then this is what you were saying is that in this area, how much, what's the appreciation here in Hamilton the last year or 2 or 3?
Thank you for asking that question. And I've been dying and I didn't want to spit it out until you told me. Now, this is going to blow your mind. In October 2021, we did our last research for Hamilton when we were getting ready to talk to the developer about this project. Okay. And we saw a 27% year over year increase for condos in Hamilton from October 2020. Over the past 10 years, Hamilton condos have increased by 125%. Hamilton is ripe for investment. It's been a hidden gem for investing in the GTA over the last decade. And it's really come to the forefront during the pandemic. And we're going to see it continue to increase over the next 5 years.
So our purchase price is $450. We're putting almost $100,000. So basically we have, if we want to do it this way, we've got a mortgage of about $360K. What are we looking at for rents here in something like this?
Right now, currently, something for like this would rent at about $1,800 a month.
$1,800 a month. And
Currently.
So when we look at, 360 as a mortgage, and then a few bucks for maintenance fees and taxes and so on and so forth. Talk to me about your philosophy about cash flow, because this would be cash flow positive, negative, even.
When it comes to Hamilton, okay, my philosophy on condo investing and cash flow gets thrown out the window, and I take a time machine to when we used to make money monthly on these things. In the GTA, it is very difficult to make anything substantial because your carrying cost and your purchase price are quite high. When it comes to the GTA, we look at capital appreciation from the time you buy to the time of sale. When it comes to investing in submarkets like Hamilton, we are actually looking at being very cash flow positive. So let's run some quick numbers. Okay, this is off the top of my head. But if we're going ballpark with a mortgage of about $360,000, we're looking at about $1,100 a month in mortgage.
Okay. Maintenance fees?
Maintenance fees are going to be around the 300 mark.
Taxes?
Taxes will be around another about $300 a month. That's inflated. It'll be less than that.
Okay, so that's what, 1,700?
That's 1,700 right there.
So basically what you're saying is, and I want the viewers to hear your thoughts on appreciation, especially with supply and demand. Basically, for all intents and purposes, we're kind of break even, not out of pocket.
We're breaking even today, but your condo will be ready in 4 years from now. And Hamilton has been increasing rent year over year continuously throughout the pandemic and currently. So when the rest of the GTA saw a 10% price drop, Hamilton saw a 12% increase from 2020 to from the start of through 2020. So Hamilton will continue to increase at this rate minimum, my prediction is. So you're looking over the course of a 4-year build, you could possibly see a 40% increase on rent. So your $1,800 will see an increase of close to $2,700, $2,800. And when you run the numbers from years from now, okay, I'm predicting that you might be $1,000 a month cash flow positive per month.
But even if you weren't, the property is increasing in value, and most importantly, somebody's paying down my mortgage. So all the stuff you're saying,
definitely.
Yeah, all the stuff you're saying is fantastic. I mean, we continue, and obviously, I'm buying a product at today's price. Today that's not going to be ready for 4 years, and so I get to watch all that appreciation and not be a landlord. 4 years from now, you're saying absolutely I'll be cash flow positive, great. But even if I wasn't, and even if it didn't go up that much, although you're saying it's crazy, somebody's still paying down my mortgage every month. I get the increase, I get a little bit of cash flow. This is why you like pre-construction condos, because I get the upside until it's ready, as opposed to the resale right away.
And when we talk about investing, you and I, we always talk about the worst case scenario, because when it comes to money, you want to be prepared for the worst so you can be pleasantly surprised with the best. And these investments are exactly like that, Rav. Worst case scenario, like you said, say for some reason Hamilton rents don't increase at all over the next 4 years. You are still having your mortgage and your property paid down by somebody else at current rents.
Yeah. No, it's fantastic. It's fantastic. And how many units did you say is in this one, Radio City?
There's 122 units, only 14 stories.
Okay, so it's a boutique, and
Yes.
and you know, in history, when you've seen product in Toronto, I mean, I've seen things sell out. And what's the quickest you've seen something sell out?
I've seen
Once it's
600
launched.
units in 8 days.
608 days.
600
Down
units
to-
in 8 days, and I've seen 800 units in 10
And this is in the GTA.
in Toronto proper. And let me tell you something. When it comes to Hamilton, we did our first project, First Access Condos, first project in Hamilton at a project that One Jarvis. And last year, I have never seen a project with such demand in my career. Hamilton is hot. Investors know it. The people in Hamilton obviously know it. So we have this project coming up. And my advice to everybody is listen, there is only 12 agents like myself that have access to this project. It is very limited. Only a small select group were invited. Okay. If you want to invest in this, reach out through Rav, contact us quickly. And if you don't make it, I'll be back on the show. We got more Hamilton product coming up later this year.
It's fantastic. Listen, Costas, what are some other things that are happening in the Hamilton area? How is it being gentrified? I mean, talk to me about GO trains or you know, subways or access to Toronto from Hamilton.
We have increased GO service. GO trains are going to be connected to Toronto very shortly in the next few years. We have a rapid LRT system that's going to be built, okay, funded by the government in Hamilton. Currently, Hamilton has 68,000 plus foreign students every year, okay, that go between McMaster and Mohawk. And anytime there's foreign students, you see a great influx in any area. And there's going to be a $4.4 billion projected city development plan that's going to be happening in Hamilton. Hamilton is being revitalized and it is changing quickly. And when it comes to investing, you want to be ahead, not behind.
And Costas, do I need to have a pre-approval with the mortgage agent to do this, or does that come later, year 3, year 4?
What happens is when it comes to pre-construction, you should have talked to a mortgage agent prior, just so you then know that you can qualify. But after we secure you the unit, you'll have up to 30 days to contact your mortgage professional and get a pre-construction pre-approval, which is significantly different than a regular pre-approval, okay? And if you need any assistance, my team is always ready to assist.
And are you able to change, you know, purchaser's name later? So for example, let's say, you know, my one of my kids working now, I know for sure in 3-4 years they'll be able to qualify, but I'll put it under my name now. Prior to it closing, can I switch it over? Does the developer let you do that?
Yes, we usually can. And the rule of thumb is we can add anybody at any time during the pre-construction process, okay, and the construction process, but we cannot remove until closing. So if you want to add somebody, we'll add them. If you want to add a corporation, we add a corporation. And then if you want to remove, say, the name and leave the corporation, that's at closing. Similar situation. If you want to put a child or a spouse on it, then remove yourself. That's all done at closing. And we can always assist everybody with that too. When it comes to your clients and our own, we always do a one-stop shop where we take care of everything for them. We want the investment process to be streamlined and seamless.
Okay, well, listen, your information's there on the screen. Costas, thank you so much for being on the show with me. I look forward to having you back, and I think we're going to have kind of, you know, 1 minute kind of tips from you throughout the season when other projects come up. So thank you so much for helping us out here.
It's always a pleasure and great seeing you. I look forward to it. Thank you, Rob.
Yes. And thank you guys for watching the show. Without you, we would not have one. Make sure you tune in next week. Same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.